One of my largest investments in 2020 and going into 2021 was Visa. And this is a company, I've mentioned it so many times on the channel, but since we no longer cover dividend stocks hardly ever, they just came out with their earnings and I'm starting to wait on my growth companies to come out with their earnings. And I have to say, I'm starting to get interested in buying Visa stock again. That's right, even though if you look at my Fidelity portfolio, we own a bunch of growth stocks, okay? If we sort by cost basis, you can see my top positions are Chewy, Corsair Gaming, iRobot, Tattooed Chef, CleanSpark. These are not dividend paying companies. These are high growth, small market cap companies that I find value in this market and I think will provide great returns going into 2022 and beyond. But looking at this recent earnings report, going into this Market Watch article here, it says Visa tops earnings expectations and boosts the dividend. And I wanted to reiterate in this video all the reasons why I love Visa and why I think it is arguably the best business model in the world. I think that Visa is just a business that I think everybody should own. So in this video, we're gonna compare Visa to a lot of other tech giants such as like Apple and Microsoft and things like that in terms of their profitability. We're also gonna look at revenue and earnings growth for Visa. We're gonna talk about earnings per share growth, valuation, and all that good stuff. So check out all the stuff down below in the description, links to M1 Finance, Robinhood, Webull. Get up to $50 getting signed up with that M1 Finance link down below. Yada savings accounts, credit card referrals, links to all that good stuff down below. If you enjoy this video, I'd invite you to subscribe, like the video if you haven't already, and let's go ahead and jump straight into it. So the Market Watch article says Visa tops earnings expectation, boosts the dividend. And now it talks about these numbers, and rather than read over them, you can pause the video and read over them if you want to. But I think the important thing to notice here is that this company is growing in a massive way. Now, first off, I want to show quarter over quarter. And this goes back to the first quarter of 2018 until the most recent quarter. It doesn't show the one that just came out because this came out like an hour ago. So this hasn't updated yet from what just came out. But it shows all the way here to fiscal year 2021, quarter 4 revenue. They're in their fiscal year 2022 now, and this update should be coming out in a couple days from now. But you can see the hit from the coronavirus pandemic on this big downturn right here, and they're now getting back to all-time high record revenue. Just in the last quarter, they finally broke their all-time record, hitting $6.55 billion in revenue, and that's not the thing I wanted to focus on. I mentioned it in previous videos, but I wanted to reiterate it in this video, how profitable Visa really is. I mean, it's really astounding. Go ahead and look at this quarter over quarter net income. You see it goes from about $2.5 billion, starts to uptrend a little bit, starts to go upwards of 3, and then now in their most recent quarter, it was $3.58 billion. Going back to this article, their profit is now $3.6 billion this recent quarter, beating out the previous record, and it's looking at doing nothing but trending up from there. And then furthermore, I wanted to talk about what I think is most impressive of this company, and I wanted to compare it to some other tech giants. The operating margins, and more importantly, the profit margins. In the most recent quarter, the profit margin for Visa was 54%, which means for every dollar in revenue they get, about 54 cents goes to bottom line earnings. That is the net earnings for the company. Now, how does this shape up against competitors? Is that traditional for something like Microsoft or Apple to do a number like this? Well, let's go ahead and take a look. Here we have a bunch of Apple statistics, the largest company in the world, and this is another one of the tech giant peers, okay? While they may be doing more net income, they're a lot larger scale than Visa. In terms of profitability, we talked about Visa having 50% plus profit margins, and right now Apple, as of the most recent quarter, was producing 26. What about other companies? What about the software as a service giant? What about the best SaaS company arguably on earth? The second largest business on the planet, which is Microsoft. If we scroll down and look at their profit margins, the SaaS king doesn't even have 50%, has 45, and that was as of their most recent record from their most previous quarter, 45%. What about Amazon? Now, Amazon is a little bit more of a capital intensive business, not quite the same, not a lot of software based products like something like a Visa has, but still you can see margins that are not even relatively close. The last recent quarter they had 6.8%, and we can keep going on and on. It doesn't matter what company we look at. We can even look at Facebook, the company that's on the brink of hitting $1 trillion market cap, still bigger than Visa. Their profit margin as of the most recent quarter was about 31%. And you get the point. So the point is, it doesn't matter if you look at Apple or the software as a service king, Microsoft, these tech giants in terms of profitability, while they all have some fantastic margins like Facebook, Apple, Microsoft, Nothing compares to Visa. And next, I wanted to go to the valuation of Visa and talk about what I think as of where the company is trading at today. Now, looking over at Yahoo Finance here, you can see that as of the previous close, it was $231 a share. As of now, with the earnings report that just came out, so far they're trading down about negative 3.2% and taking it down to about $224 a share. Now, real quick, I want to mention for you dividend investors out there, for those of you that are investing in dividend growth for this company, they did just do a massive boost to the dividend. They were paying out 32 cents a share, and now that is upwards of 37.5%. If you take 37.5, divide that by 32, you can see that they have 17.8% dividend growth for the year in 2021. Almost 20% dividend growth for any company is an awesome number. The dividend yield is still pretty low, but after looking at this drop as well as the dividend boost, they're now starting to get closer to a 1% dividend yield. Not very high, I know, but for a fantastic growth company like this, that's not bad whatsoever. Now, looking at the earnings per share potential for next year. This year, they're gonna finish out at about $6 a share, a little bit under, and next year, they're gonna do $7.27. So let's take the share price where we're at right now, 224, and let's put that in our calculators. 224 and divide that by the earnings per share next year, which is expected to be at 7.27. And you have a PE ratio of this company that's right at about 30. And I want to take a moment to say that I think that this is absolutely deserved. With the revenue growth and profitability of Visa, I think that that is absolutely deserving of a 30 PE ratio. Now, going back and looking at the revenue growth, you can see that last year they did 21.85 billion. What about this year? This year they're gonna finish out at 24 billion. Next year they're expected to go up to 28.8 billion. Expected at 10% revenue growth this year, expected 19.9, almost 20% revenue growth the next year, and this is for a company that's doing tens of billions of dollars in revenue, so this is by no means a small company. It's one of the largest companies in the world. And the thing is, we just showed quarter over quarter numbers, and I think what is more important to look at with any company, not just Visa, is to look at the annual numbers. You see the little hiccup with COVID, but other than COVID, if you look at this one anomaly, it doesn't really change the story for the overall trend line for where this company is going. And looking at the net income, same story. It's a steady increase year over year other than the one hiccup due to COVID. And even this last fiscal year, they beat out versus 2019 fiscal year. And the same thing for the profit margins. It's a steady uptrend from fiscal year 2014 doing 42. And now in their most recent fiscal year, they were doing 51. And they might even get to a point where they're doing 60+% revenue margins, as crazy as that sounds. And you get the point, okay? Visa trades at a valuation that might be a little bit higher than the market. But that said, I think it is deserving. It's a company that has tens of billions of dollars in cash. It's raising that dividend at least a minimum of 10% a year, almost 20% as of today. And it's a company that I like. And so in regards to the share price, if we look at the last year for Visa stock, if we search it into Google right here, Visa stock, and we go look at the last year, it's up 22%. And even at factoring in the drop that we're likely going to see tomorrow, from what they're pricing in so far, it'll probably only be up like something like 16% as of tomorrow's open. And year to date, the company's only up a couple of percent. And that is much lower than a lot of these tech giants that have seen 30, 40, 50% share price growth over the last year. Now for me, going back to Webull here and looking at the yearly chart, looking at the day-to-day candlesticks, you can see that this company has recovered quite nicely from COVID, and over the last year or so, they've started to flatten out. Now, they are starting to go to this lower level at 225. If it can really start to drop significantly lower, getting this PE ratio, the forward PE ratio I should say, down into the mid-20s, to where you can start to see this company trade say below like around 215 or below, that's when I'll really start to get interested in Visa. Not that I'm not bullish on them now, but I'm really picky on my investments, especially now that I'm more of a growth investor. I want to really be picky on my stock picks for a company that is a little bit more of a Goliath, a lot more slower mover for a company like Visa. But overall, guys, I think that's all that I have for this video. It's a company that I love, one that I was a previous shareholder of, and one that I may be a shareholder of very soon in the future. But thank you guys for watching. Subscribe down below if you haven't already. Hit the like button and sign up for M1 Finance for up to $50 just for getting signed up with that brokerage. Check out other links down below as well. And thank you guys for watching, and I'll catch you guys next time.